What's going on, family? Dr. Wolf here with you, and we finna get into some of the hottest money moves out today, fam. Now, you probably heard people flexing about trading options like there's some secret sauce when it's really not. But what I need y'all to know is the real difference between buying a stock and buying an option. All right, family? Now, let me make this super simple for y'all. So today I'm going to be breaking down shares versus options in plain language. No Wall Street jargon, just real talk so you know exactly what you're getting into. All right, family? I'm gonna make this as simple as I can, fam. Now, before we get into the episode, we always gotta give a disclaimer. Now, remember, Think Your Wealth content is for educational purposes only. Like I always say, do not sue us. We're just trying to help y'all out, gang, fam. So, this is not financial advice. I'm not telling you what to buy. I'm just giving you the tools to understand the game. All right. And with that being said, we also love to give out our money mindset moment. Now, with every money mindset moment, this is just an affirmation, something to just help you continue your day or something you to think about and reflect on. Now, knowledge is the first investment you'll ever make. If you don't know the rules, you'll end up playing somebody else's game and losing. Learn first, then play the game. All right, family? I'm going to say that back for y'all. Knowledge is the first investment you'll ever make. If you don't know the rules, you'll end up playing someone else's game and losing. Learn first, then play the game. All right, fam. Let's get into it. All right, and man, shout out to Blessing Visions for the merch. You know, they had a crazy event yesterday, a pool party. It was fire. You know, shout out to them. They got some awesome merch. I checked them out on IG. All right, fam. So first things first, we're going to get into shares, all right? AKA stocks. Now, what is a share or what is a stock? Now, buying a share means that you're buying ownership into a company. Now, we always like to use Apple as an example. Just hoping everybody knows what Apple is. Now, if you buy one share of Apple at $100, you literally own a tiny piece of Apple. Now, we all know Apple is a huge company. They have the phones, the computers, all that stuff. It's a $1 trillion+ company, you know, $3 trillion. I don't want to downplay Apple. So let's say you bought one share of Apple at $100. If the stock goes up to $150, you've now made $50 in profit per share. If it goes down, you lose value, all right? So pretty simple, family. You own it until you sell it. All right. Now, why do people like shares? It's safer, straightforward. It's good for long-term wealth. Now, when you think about it, you have your 401ks, your Roth IRAs, all of your retirement accounts. Those all have long-term investments in it. Most likely you're buying shares, maybe some bonds. And that's why when you get to a certain age, you're able to retire because over time, those shares and stocks and whatever you've probably bought made you a certain amount of money over time. All right. So it's less risky than options, but also less potential for fast gains. Okay. So not everything is a quick flip. All right. Now that's what stocks and shares are. Now let's talk about options. An option is basically a contract that gives you the choice, but not the obligation to buy or sell a stock at a certain price within a certain amount of time. All right. So you could own a stock or a share for the rest of your life. An option, you can't own it for the rest of your life. You only have a certain amount of time. All right, family. Now think of it like renting an apartment with the option to buy it later. You don't own it yet, but you control it for a certain amount of time. Now there's two types of options out there. There's a call option, which means that you're betting on the stock to go up. And there's a put option, meaning that you're betting on the stock to go down. Now, that's the only types of real options that I'm going to tell you guys about today, just to make it, real simple. Now, in that example, when we use Apple stock, let's say Apple is at $100, right? And you buy a call option to buy Apple at 110 within the next month. All right. So within the next month, you buy a call option, you're betting that Apple will go up to 110. If Apple goes to 150, your option is worth money because you lock in the right to buy it cheaper. All right, family? Now you've made the right decision. You bet that Apple was going to go up to 110 and it ended up going to 150. So now you can actually buy Apple at a cheaper price because of that contract that you own. You said you're going to put it at 110, it hit 150. All right, family? But let's say if Apple stays below 110, the option is then going to expire worthless, and you're only going to lose what you paid for that option. Right? So you agreed on a contract for it to hit 110, but it never reached that price within that certain amount of time. Now, because of that, something called time decay, because you only have it for a certain amount of time. That option then expired worthless, family. Okay? Now, I got a quick example that I want to show y'all my other screen here. Because I know some of us as visual learners, I'm a visual learner, so I like to always make sure that y'all can see the visual side of it, right? So what we're looking at right now, this is on Robinhood actually. So if you have a Robinhood, you can look at a simulated return. So this will help you, simulate what your contract could do if it hits a certain price at a certain time. So what I'm looking at right now, this is the S&P 500. You can also buy calls and puts on that. And this call option is for the 646 call. The S&P right now is at 645.50. So that's $645.50. So it's showing that it's currently down $53, but this contract is worth $50. This expires on Monday. I just want to show the difference. This contract is worth $50. It says 50 cents. Every contract is pretty much 100 shares times what you have. So it says 50 cents, but you're owning the right to have 100 shares. So let's say you have 50 cents times 100. What does that give you? That's $50. All right. So it costs $50 to have that contract. But if you look at the current SPY price, it's hit $645. So you're probably thinking, why am I not spending more than $645? It's because you only have it for a certain amount of time. All right. So now this is where it gets a little bit tricky, but I'm going to try to explain this as best as I can. So let's say on Monday, the SPY hits 648. It says that you're going to make $115. All right, family. So you took $50 and you flipped it to $115. That's a percentage of 111%. In one day, you made 111%. Now, let's say if you only just bought the SPY and it hit 648. You only bought one SPY stock, right? And it hit 648. You only made $2.50. Now, I'm pretty sure you guys can see why people buy calls and puts. All right. I went from an option perspective, I've made, let's see here, $115. All right. But from just buying shares, I've only made $2.50. There's a huge difference, family. And I didn't have to spend $645.50. I only spent $50. And I was able to, more than double my money. And that's a huge reason why people take advantage of options. So that's why we talked about it a lot. That's why we have our Discord, because there's more ways to make money in this market, family. It's just nobody's really teaching it, or if they are teaching it, they're trying to charge out for it. All right, family. So let's really get into this a little bit more, right? All right. So we talked about stocks. We talked about options. We gave out the Apple example. We gave out the SPY example. Now, if you're a beginner, how should you think about this? Now, we already know shares is an ownership. It's slower but steadier growth. You can hold it forever. Options means that you have a contract. It's cheaper to get in, but it's a huge upside. But it's also a high risk. Let's say if that example I showed you with the SPY, if it never hit 648 and it stayed at the same price, you would have lost $50. I mean, yeah, nobody wants to lose money, but you could have lost all your money if it didn't do that. Now, that's the risk to reward you have to really think about. If you're going to get into any options, the risk rule is to never put money in options that you're not ready to lose. And we see this all the time. People hit me up like, yo, I got $200, bro. What's up? I'm trying to make some money. Bro, if you're afraid to lose your $200, just don't do it. Just stay with buying shares, learn the game, do what you got to do. And what I usually always recommend is to start by learning paper trading, which is a practice account, before risking any real money, family. That's the best way to get back to it. And I'm going to just tie this back to the money mindset moment that I started with. Learn the rules before you play the game. Options can make you quick money, real quick money, family. Like literally within minutes, seconds, you can make a good amount of money. But they can also break your pockets just as quick. All right, family. So get the knowledge in first before you jump into those waters. All right. Now, we already know shares give you ownership. Options give you choice. Calls mean that the stock is going up. Puts means that the stock is going down. Options can multiply your gains, but also multiply your losses. So you have to tread carefully. You really need to know what you're doing. Stocks build wealth slow and steady. Options are like the fast lane. But the fast lane comes with crashes, potential death. I know we're being dramatic over here, but if you're using money that you're not really ready to use, you could blow an account really fast. So if you're just starting out, focus on learning before you start racing out there, family. All right? That's really all I have for y'all, fam. Let me know if you have any comments. If you have any questions, please drop them down below. Hit us up in the DMs. Stay tuned with Energy and Wealth. We're going to be dropping more videos and episodes. There's different knowledge on what y'all to use in y'all everyday life. We're here to break cycles, family, not break the bank. All right? It's the Wolf. I'm out here. Peace.